As a homeowner and a realtor, I think there's two numbers that we need to keep track of and have a greater understanding of. And those numbers are our assessed value and the property tax amount. And so today we're going to talk with Alishia Topper, treasurer for Clark County, and Peter Van Nortwick, assessor for Clark County. And we're going to learn a little bit about how the assessor office and the treasurer's office come up with the numbers that they do when determining the property tax and our assessed value. So let's join them. Okay. All right. Thank you. So thank you both for taking the time to join me today. Could you please each just briefly explain the purpose and the function of each of your offices?
Well, you go first, Alishia.
Okay, thanks, Peter. Yes, good afternoon. I'm Alishia Topper. I'm the Clark County Treasurer, and the Treasurer's Office is responsible for the billing and collection of property taxes in Clark County. We're also responsible for investments of public funds. We manage debt on behalf of multiple government entities, including the school districts, the county, fire districts, and others. We're also responsible for banking services. So I'm essentially the bank for the county government. So I hold all the accounts for school districts, the county, all of the independent elected offices, fire districts, cemetery districts. So you can think of us as an independent financial arm of county government.
Wow. Peter, can you top that, please?
Oh, sure. I can top that. I'm Peter Van Nortwick, Clark County Assessor. Our main duties in our office, the first one we have is the listing and mapping of all real property within Clark County. A lot of the listing and mapping functions are actually done by our GIS department, but it is a responsibility of my office, and some of the people in GIS are actually deputized by my office and do that work for us. The second one is I value property for the purpose of taxation. And this is mainly what most people know the assessor for. I also enforce the highest lawful limit on each of the tax districts. We also determine the tax rate that is required for full collection of the levies as approved by each of the taxing districts. We manage the current use and senior exemption and deferral programs. And the last kind of thing we do is we manage the annexation process.
Oh, okay. So could either of you please explain how does your two offices work together? Because one is the assessing of the value of the property, and the other one is the collection of the payment. Am I correct?
Yeah.
So how do you two work together?
So the first thing that I do is I go and I do the mapping of the property, get them in the system. We value the property for the purpose of taxation. We get all the budgets from the tax districts. We determine what the tax rate needs to be based upon the total assessed value to come up with a tax rate. And from that, we build a tax roll every year that in January we pass off to the treasurer's office. So I'll let you take it from there, Alishia.
Yeah, so once Peter has certified the tax roll, that information gives me exactly how much each property should be paying towards their taxes. This year, for example, we billed $828 million in related property taxes. We generate statements and we mail bills. We collect all the revenues, and then we make sure it's distributed to each of the taxing districts. So for example, the schools may have a school levy or a school bond. And so we're billing to collect money on behalf of that school, and then we distribute the money to the school. The same is true for each of the cities and the port, and also for the county, both the road fund and the general fund. So we're essentially billing, collecting, and distributing once Peter certified that tax roll.
So Peter said he certifies it by January, and then he hands it off to your office. And so when are the property taxes collected? Is it throughout the year, or is it just in specific timeframes?
That's a good question. So state law predicates when property taxes are due. So there's a provision in law that says county treasurers have to mail property tax statements by March 15th. And that is assuming that the assessor's office has done their work and gets us a good file in the tax roll by a certain date. So by March 15th, all property tax owners, both business, personal property, and real property, will receive a mail from my office. Those taxes are due by April 30th. And that date is the same every year. And people will have a choice. If they owe more than $50 in property taxes, they have the option to either pay their full amount by April 30th, or they can choose to pay in 2 installments. So they can pay half on April 30th and then a second half on October 31st. So if someone only pays half on April 30th, I'll send them another bill, usually in September, letting them know they still have half of their property taxes due and it's due by October 31st.
Well, okay. So this question is based on my experience as a homeowner. How are the property taxes most commonly collected? Because I pay mine through my mortgage company, because my mortgage company, should I default on my property tax, they don't want to be put in a junior position in terms of collections. Should I default? And so what's the most common way? Is it through the mortgage company? Is it directly from the homeowner? Or is there a hybrid of ways that the property taxes could be paid by the homeowner?
Great question. And Michael, you are in the majority. There are 43% of property owners that pay through escrow through their mortgage company. But in my office, there are multiple ways that people can make payment. We want to make paying your property taxes as easy as it is to pay any other bill. So we offer payment through mail. And 31% of property owners choose to submit their payment through mail with the remittance envelope that we include with their property tax. 16% go online and they make their payment online. We have 10% that come to our office, physically come in, and they drop off their payments for us to process. So there's 4 different main ways for people to pay, and escrow is the most common.
Okay, well, thank you. Are there tax deferral or tax deferral options out there for homeowners that are elderly, on a fixed income as an elderly person, or someone that's disabled?
Michael, I'm glad you asked, because the senior exemption and deferral program is something that is managed in our office. And yes, there's 2 different options. One is the deferral option, which if you make a $55,000 or less and you're a qualifying senior or disabled veteran, you can utilize that option. Basically, the state is paying your taxes and that one has to be paid off. Unfortunately, a lot of people get confused between the deferral program and the exemption program. So the senior exemption program, and it's just a little over $50,000, the qualifying income that you have to qualify for the senior exemption program. That is a complete exemption. There is no need to pay it back at any time as long as you qualify. And there's 3 different levels of it. The first level, on all of them, your property values are frozen. On the first level, you are exempt from any excess taxes. And excess taxes are those that are voter approved, like the school levies and like the vote that just happened in Vancouver. Those people that are on that program would be exempt. After the first level, you just move down to the non-excess levies. A portion of those are also, you don't also have to pay them based upon lowering of the assessed value. So the first one is you get your assessed value lowered between 50 and 70,000, and then the on the highest level, which is actually the lowest level of income, then your assessed value is decreased even more, and so any of the regular taxes are also not being paid. So if you're a senior and you're struggling to make ends meet and you have that you're that low income, definitely contact our office because we do have programs. Too often we see people that, they don't know about the program and they actually don't even come in and talk to us until Alicia's saying, hey, you're late on the tax bill. And even if you are late and you come in and you did qualify, our offices will work together to make sure that if you should have been on the senior exemption program, you can get on the senior exemption program.
Well, thank you. Is there a tax deferral option for the households impacted by COVID-19? Because we are still in the midst of a pandemic, and in some ways it may have an impact on employability. So is there a way for someone to receive tax deferral for that purpose if they are senior or disabled?
No, there's not a program specifically for people that have been COVID-19 impacted. But I do believe that in the treasurer's office, and Alishia can speak to this, people can set up tax payment programs.
Yeah, that's correct. We do, as a matter of standard practice, offer payment plans. So if an individual isn't able to make a full payment, they can set up for installment payments. Per state law, we still are required to charge interest on the balance owing. So every month there is this an amount of interest that will accrue on the balance owed. But at least it gives people the peace of mind to know that they're in an agreement. They can make payments and relate to the state of emergency and COVID-19. Once the governor proclaimed a state of emergency, there is a provision in the law that allows county treasurers to move the due date. So if you recall, in 2020, I was able to make accommodations and move that April 30th due date to June 3rd, which allowed individuals to bypass the 3% penalty and also bypass the interest that would have been charged in May and June. So there was a little flexibility, but we've been in the pandemic. It does feel as though there has been some stabilization. For example, last year, out of the 100% of taxes billed, 99.14% of all taxpayers made their payment online. So less than 1% of our community was in some form of delinquency. And we definitely work with those folks to make sure they're able to get caught up and get their taxes paid.
That sounds great. So Peter, I believe this one is for you. Now, according to taxrate.org, Clark County property tax rate is 94 or 0.94-ish% of the home's median value. So could you please explain to us what the current rate is or percentage of taxation for the median home value?
Well, I think first, Michael, we need to explain a little bit about assessed values and taxation, how they work and when the values are. Because if you're paying your 22 taxes, right? So Alicia's just sent out the tax bill for the 22 taxes. That's based upon the 2021 assessment. So that was mailed to most homeowners last June. That's based upon sales in 2020. And so the way it works is first sales have to happen, which in this case, they would happen in 2020. Then our office has to take that entire year of sales, analyze it, come up with what the assessed values are, do our work, and then pass it over to the treasurer for collecting the taxes, which happens in 2022. So every time when people start to really be concerned about what their assessed value is usually when they're paying the taxes. And usually when they're looking, that's based upon sales that are 2 years prior.
So you don't assess at 100% value of the home, do you?
Well, that's really kind of a complicated question because we are under state law required to assess at 100% of market value. So we do assess at highest and best use. So for example, if you have a home on acreage, let's just say it's worth $700,000, but that land's developable and as development land, it's say maybe worth 1.5 million. We have to assess at the highest and best use of the market value of the property. And that is under state law. So if we assessed it 100% of market value with the bell curve, right? Now, if you're familiar with the bell curve, if we're at 100% of market value, half the properties would be overassessed, half the properties would be underassessed theoretically. And so in our office, we push back to aim to be at 95% of market value. And that does is that moves the bell curve. And so that we have less properties in the county that are assessed at over 100% of market value. And so 95% is what we aim for. And that's really 100% of market value.
Because it gives you a little bit of wiggle room.
Yeah, it does give you a little bit of wiggle room. And because, like I said, with a bell curve, you know a certain percentage are going to be on either side of what you do. And by shifting that lower, you have less homes that are assessed at over 100% of market value. So, you know, it cuts down on the number of appeals and everything that may happen.
Okay. Well, just a moment ago, you mentioned buildable land or land that can be developed. So how do you assess the value of raw or bare land?
So there's a couple ways we do it. If there's no sales in the area, we can do what's, you know, a land extraction type model, because we do model what the value is of homes, what they're selling for, and based upon new homes and depreciation, we can back out what the land values are. So if there's no land sales in an area, we can do what's called a land extraction model. If there are land sales, that's typically what we like to utilize. And we do utilize the land sales. We analyze them. And it, you know, there's a lot of different things that it depends on. Is it prime development land? Is it maybe future development land? Or is it, you know, farmland or other lands that can't be utilized? So we have to take into account all the different sales, what it is, and analyze. A lot of people working with our office don't realize a lot of what our appraisers are doing is statistical analysis. We are taking a look at all the different sales. We are figuring them out. One of the things that a lot of people think is, well, I bought a property for a certain amount, or I bought some land for a certain amount. That's what the assessed value should be. And we actually can't, under Washington state law, do that. Really what we're doing, instead of valuing the property, is we're valuing the characteristics. So we're taking a look at all the different sales, analyzing it, and the characteristics which we value. We come up with a value, and then we apply that in mass, because we have the properties that sold, but we have all these other properties that also didn't sell, that we have to apply those values across the board in equity, sold and unsold. Hopefully that answered your question.
Yeah. So on the GIS, because you mentioned earlier that your office manages or works with the GIS, and you have some deputized people that works in the GIS office. And on the GIS, it mentions the millage rate for each property. Could you please explain what the millage rate is, and how is that used to determine the value, or the, you know, what's the play for in terms of tax collection, or you know what I mean? Either the value of the home or the tax purpose of the home.
So the first thing to point out is a lot of people don't know what millage rate means. Millage rate means the rate per thousand of value. And we have a different mill rate, which is, it's the same across an entire tax district, but each tax district that sends us their budget, and the tax district would be City of Vancouver, Clark County, the fire districts, the library districts, the school districts, the cemetery districts, probably less some out there, but you know, so every district, they send us a budget, and it's the exact dollar amount down to the penny. I mean, you know, so they'll send it to us, let's say like the county, maybe it's $58,379,200 $238.58, right? That's how it comes to us. It's exact dollar amount we're going to collect. So what we do is we take that dollar amount that to be collected, and once we've gone and assessed all the properties, we have what's called the total assessed value. So we take that tax district budget, divide it by the total assessed value, and then that gives us the mill rate for each of the taxing districts. Then once we come up with what that mill rate is, we take that mill rate and apply it back to all the individual properties based upon their assessed value. And that's how we make up the tax roll that we pass over to Alishia's office for billing of it. So it's hard to sit there and say, well, what's the mill rate, the total mill rate across the county? It can vary dramatically from, let's say the city of Vancouver to Camas to out maybe parts of the North County, because there's all these different tax districts that make up the bill, and each tax district has different things that are going on. Like if you're in the city of Vancouver, Vancouver School District and Evergreen School District have different levy amounts and different levy rates. So the tax rate's going to be different for people in the Vancouver School District versus the people in the Evergreen School District, just because they have a different tax district mix that comes up and comes up with the total mill rate.
Well, that makes sense, because the needs of Ridgefield may be different than the needs of downtown Vancouver because of the growth rate of those two communities. And Ridgefield is its own separate community, when Vancouver, I guess I would imagine, is clumped in as one big pot of taxable properties and tax collected monies. Is that a fair thing to?
Yes.
Am I on the right track?
Yes.
Well, just as a realtor, we use what we call a comparative market analysis, and on the lending side, they send out an appraiser to determine the value. How does your office determine the value of a property? Now, you gave a great explanation for bare land, but like a house that's, like say a 1920 house on a quarter of an acre, how do you assess that? Is it just the sales, the comparables?
All right, so that's a great question. And when an appraiser comes out to your house, they are valuing your house. In our office, we do what's called mass appraisal, and we're not actually valuing your house. What we are doing is we are valuing the characteristics of your house. So what we do is all the sales that happen.
Peter, could
Yes.
you define what a characteristic is for folks?
Oh, I was just going to do that. Great. But thank you, Alishia. So when a house sells, right, we take and we analyze it. And if there's different things we can identify, whether it's square footage or number of bathrooms or, quality of construction, those different things that we know about and measure, we analyze all that, and we use statistical analysis to come up with each of these different characteristics and put a dollar value on them. And so what we do is once we come up with these values for, let's say, 1,000 square foot of a class 3 house in Vancouver, I'm just going to use a round number, nowhere near correct. Let's just say it's $100 per square foot. Once we determine that's what it is, then we have to apply that equally in mass across all the properties in that district to make sure everything's in equity. So, there's certain types of properties that, an assessment we know that we're not good at valuing. For example, if a home is an over improvement in the neighborhood, very difficult for us to assess in mass. A lot of times people say, well, why don't you just take the sales price and, put it on the house? Well, that's what's called chasing sales. That's actually against the law in the state of Washington. But as a realtor, you know, every property has a range of value, right? So if
Right.
a home, let's say, I always use the example of Aho homes. If you have 10 Aho homes and they're same street and they're identical, and they sell between 200,000 and 220,000, for example, you got these 10 sales. We have to analyze those sales and we have to come up with a value to place on all of them that is the same. So we're probably going to analyze those sales. It's got a range of value, put 210,000 on each of them, right? The person that bought it for 200,000 gets their assessed value at 210. They think, wow, they overassessed their house. The person that bought it at 220 thinks, oh, they underassessed the house. But the fact is they're all assessed at the same amount and within the range of the market sales. And for our assessment office, that's what we're doing, is we're trying to come up with the values of characteristics of that house that fall within the range of the market value of the house.
And Peter, how often does your office conduct a new assessment of home values? Is it an annual thing?
Well, once every 6 years, we physically inspect a home. In the other 5 years, we are what's called doing statistical analysis and annual adjustment. And so we're taking a look at the sales and doing a percentage adjustment based upon what the market's showing is happening with sales.
Well, how has the new development that's taking place, because you really can't drive throughout the county and not see somebody swinging a hammer or putting up a new building. So how has the new development throughout the county influenced the values in established neighborhoods, both in terms of assessment and property taxes? Because you just used the 10 Aho homes example in your answer, Peter. So how does that come into play, the new development, both in terms of assessment and property taxes?
Well, I mean, it really depends, Michael, and that is if we see that, you know, the new development has created the value of the neighborhood to increase, because we do make adjustments for age and condition on properties. And so the adjustments we make is based upon what the sales in the market are telling us. So if, for example, you have a lot of new homes that are coming in, but it's not reflected in the sales of the older properties, it's not going to have any impact at all. But if you see the new construction is coming in, it's becoming a desirable neighborhood, and suddenly older homes, you know, people want to live in that area, and the market's showing that their values are increasing. Correspondingly, the assessed values are also going to increase because the sales prices are increasing.
And so, Alishia, it doesn't impact you until it impacts Peter's office, correct?
Yeah, and for us, it's a little different. When a new home is constructed and there's a sale, all of the real estate excise tax affidavits process through my office. So we've seen increased volumes of RETAs because of the increased turnover and also the new construction sales. But from a billing and collection standpoint, the workload is about the same because we do a lot of our work through electronic means. So it's basically an import file process. So it's mostly on the real estate sales side where we see increased workload.
Okay. Well, as a treasurer, has the rapid development and new construction presented any particular challenges to your office?
Not for my office specifically. I think it would lay heavy on the assessor's office since he's responsible for picking up new construction. And we've seen that his team has definitely been rushing and working really hard. So each of those cities and the county can get the new construction on their books. But Peter can speak a little bit more to the impacts on his office.
Okay.
Yeah,
Peter, would you please?
Michael, new construction, it's the most labor intensive work we do because that's the first time that we're seeing a house. And so we have to go out and measure it and make sure we have all the characteristics right that first time. So if we get a house right at new construction, when we go back there 6 years later, really not much has changed, right? So it is very important to get it right that first time. And so we do spend a lot of time picking up new construction. We have until the end of August to get all new construction on the tax roll. And it's very important for the taxing districts, new construction, because I talked about before that tax districts send us in a exact number to collect. And the way that the highest lawful levy, which I mentioned earlier, works is if a tax district, let's say in 2021, was able to collect $100 in property taxes, the next year they can take that $100 and increase it by 1% plus any new construction that's added within the tax district. So let's just say they had the $100, they got to add the 1%, they're up to 101. If there was $3 worth of new construction, now they can collect 104. And so the way that the taxing districts in the state of Washington really can increase significantly their the amount of taxes that they can collect is by having that new construction within their tax district.
You know, I would be remiss not to say that new construction for the treasurer's office, it's more about the number of customers that we're helping to connect with their property taxes to better understand the system. And we field a lot of phone calls for second half installment alone. We answered 4,371 phone calls just for our second half tax statement. So as we add new residents to Clark County, there is additional workload just because of that customer service component.
Yeah, and the same thing, Michael, I'd be amiss if I didn't say, well, new construction adds value to what tax districts can collect. That doesn't impact school districts, like school levies. Because a lot of times, school levies, when they're passed for an exact dollar amount, which is really setting their highest lawful levy. So if a school district said in 2022, they wanted us to collect $33 million in property taxes, it doesn't matter how much new construction is built. They're not collecting more than $33 million because that's what the taxpayers said that could be collected. Instead, what's happening is that new construction is help paying the $33 million. So it's spreading out the taxes. So it's a difference between how it works in school districts that passes levies versus, let's say, the city of Vancouver or Clark County, where new construction adds to the amount of collection they can make in property taxes.
Well, Alishia, that number, that the second quarter or the second half of calls that you filled, it was 4,317. If I
Yeah, 4,371 phone calls, and that was only in Q4 of 2021.
Do you have an idea what a typical year or typical number of calls per quarter would be?
Well, we have spikes in phone volume, and it's typically around the time that tax statements are mailed. Also, we have a huge surge if people miss their payment. We send a reminder postcard letting people know that they're delinquent and that they should get a payment in quickly. And so there's surges. We have a big spike in March and April, and then a spike in May when we send those postcards. And then it's pretty quiet during the summer, except for the title companies that are calling us and working with us on those real estate affidavits. And then there's another surge in September, October for second half. So in general, we're fielding over 10,000 calls a year, and it varies depending on the time of year.
And I would imagine there's been an increased volume in a number of calls due to COVID and the county office being shut down. I would imagine you guys aren't accepting too many, if any, walk-in appointments or clients or, in-person visits.
Yeah, we, depending on the hospitalization rates, we've been really carefully monitoring the safety and health for not only our customers, but for our employees. So we have been, we've moved to being open to in-person services through appointments. So people can either call our office to schedule an appointment, or they can go online and pick a date and time that works best for them. So we have worked really hard and have strived to make sure we're really delivering quality service and accessible service. But the format of just a walk-in day, it hasn't worked through this pandemic and through COVID. But that's a great question. Yes, currently we're going to be closed through the end of this month, but now that hospitalization rates are dropping in Clark County, we will be opening back up for appointments.
And Michael, I think I should add is what we found through this is that having appointments makes it meeting with the taxpayers and homeowners a lot more effective. Because a lot of times people would walk in and they wouldn't have everything that they needed. And so they would have to come back, multiple times. Whereas when we set up an appointment, we talk to them beforehand, we let them know this is what really you need to bring, and they come in, better prepared. And so that's why we've really gone to doing appointments, is it allows us to provide more enhanced service, more personalized service for each of the taxpayers that we are interfacing with in our office.
Yeah, it really does. It does
I'm sorry.
increase the accessibility because we're able to do text reminders if people opt in to receive them, and also email reminders with a list of documents that they need to be prepared. So to Peter's point, it just gives people so much more information about what they need to have a successful transaction.
Yeah, I was going to say, I would imagine, because you get to have the discussion with them about what they need, what documents they need, and all that, it makes the appointment more efficient.
Absolutely, yes, absolutely. And we do want to still provide that in-person personal touch. I mean, we've all strive for superior customer service, and yeah, so when people can come and they can walk away feeling like they got their task completed, that's a win-win for both our offices and for our taxpayers.
Oh, absolutely. So, Peter, as an assessor, how does property improvements come into play when determining the value of a home?
So we value the characteristics. So if an improvement is like, say, an outbuilding, we analyze sales, we get what the value is of outbuildings, swimming pools. There's some things that we value. There's some things that we don't value. For example, a lot of times people, talk about landscape. We don't value landscaping because landscaping, you ignore it for 30 days and I don't care how much you spend on it, it's a mess, right? It gets overgrown with weeds. It hasn't value. So we're really focused on valuing those improvements that are, built, that are real property, that are going along with in the sale of a home. Those things that are lasting and do add value.
So, like an addition to an existing home. So, if you take a home from 1,000 square feet, just to have a nice easy number, and you add an addition to it, and it adds an additional 500 square feet of livable space, that would add value, not necessarily painting the walls and putting new cabinets in the kitchen. Correct?
Correct.
Okay.
Yes.
Now, anybody that's lived in this area for some time have known that we've had just a huge explosion in equity over the last few years. The prices have gone up, exponentially, in my opinion. How has that influenced your office in determining the value of a home when determining the assessed value, and therefore the amount of property taxes that's allowed to be collected?
All right, Michael. So there's kind of two different questions in there, and I'll address them separately. First is we are to assess at 100% of market value. So when home values increase, we are to follow those increases with the assessed values. There is nothing in our state law that limits the amount that an assessed value can increase. And so, a lot of states come from, like, I think Oregon, like they have a formula for coming up with the assessed value, and it goes up 3% per year. That's not what it is in Washington. It's 100% of market value. If your home or your property doubled in value, we can double the assessed value. So then the question comes is, how does that impact property taxes? And there are two really separate kind of functions going on at the same time. So before, when I talked about the highest lawful limit, the fact that tax districts send us in what we're going to collect in property taxes for a set dollar amount, what that means is that when assessed values are higher, our tax rates are lower, because it doesn't matter if home values double, we're still going to bring in, let's say I use the example of the school district, $33 million. We're bringing in $33 million, whether assessed values double or they're cut in half. We just adjust the tax rate to make sure that we collect the $33 million that the tax district is allowed to collect. So a lot of times, we send out the assessed values. Let's just say assessed values last year across the board, they went up about 20%. The first thing that people start doing is calling to our office. What's that going to do to our property taxes? We have to basically tell them, well, we don't know, because we don't know what the tax districts are going to send us in terms of what they're doing with the property taxes within their district. But we can tell you that regardless of what they do, your tax rate will be lower than it would have been if the assessed values had stayed the same. So I guess the key thing to realize is increasing assessed values does not bring any more money into any of the tax districts within Clark County.
Because those numbers are predetermined, correct?
Yes, they're based upon their highest lawful levy and the dollar amount that they're allowed to collect. Okay.
Well, on the flip side, during the Great Recession of 2007 through 2009-ish, the real estate market locally took a nosedive. What was the greatest challenge for each of your office at that time when we were in a declining market?
Well, first, Michael, I'd like to have to say neither Alishia or I were here during that time.
Oh, okay.
But I can talk to it, and that is the biggest challenge that you have in a declining market is, like I said, the 2022 taxes are based upon the 2021 assessment, which is based upon the 2020 sales. Well, if in 2021 values went down, our assessment's still going to be based upon the 2020 sales. And so what you have is then when people are paying taxes, they look at it and they go, wow, the value's a lot higher than what my market value is today, not realizing it was based upon what values were 2 years prior. And so, there really is no other way to do it, because sales have to happen and then they have to be analyzed, and then people have to have a time where they can appeal those values. And so all of our assessments are done as of January 1st of a particular tax year, and that's the only time when that value does it. So that's the biggest challenge, is people understanding that when the values are going down, the assessed values going down is also going to lag.
Yeah, and the same is true for our office. I wasn't here during the Great Recession, but I do know that delinquency on property taxes has a 3-year lag. A person by law has 3 years to be able to get all their property taxes paid for in order to avoid foreclosure. So the 2009 timeframe, we wouldn't have seen additional foreclosure activity until 2011, 2012. But our delinquent tax collectors, and in my office, we have 2 full-time individuals that work on collecting and reaching out to delinquent property owners. And we have about 186,000 parcels, as I mentioned. So if we have a higher delinquency rate, that's going to be more work to try to contact those people, get them on payment plans. So it was an impact just in workload from the delinquent collection side, but also I know that the county in general, as well as other governments, really had financial hardships during that time with decreased sales tax revenue and other revenue sources that had generally been stable. So I'd say it was probably a crunch on everybody's budget. And I'm sure a lot of departments and offices had to go through cut scenarios where they either lost FTEs or they had to reduce services. So there's, downstream impacts to any recession, in addition to the impacts it had on homeowners.
Okay, well, Alishia, you're up because we're going to talk about House Bill 1410. I stumbled across this. I was looking for some other information. I came across this thing, House Bill 1410. What can you explain to us what exactly House Bill 1410 is?
Okay, well, you stumbled across a good bill. I'm going to go ahead and share my screen really quick because it has a few different components. I thought it would be easiest to really illustrate it through a PowerPoint. So I'm going to ask, can you see my screen?
Yes.
Okay, so engrossed substitute House Bill 1410 was introduced by Spokane Representative Volz, and the intent of the bill was to try to create delinquent relief. So penalties prior to this bill for late property taxes were 1% per month for the amount of taxes due. So the base amount due every month, you would get a 1% interest accrued. Plus on June 1st, you would get a 3% penalty on the total base amount due. Then if you didn't pay by December 1st, you got an additional 8% penalty. So the thought was that this was usury, and the legislature determined that they wanted to not only eliminate penalties, but they also wanted to reduce the interest. And in light of what the interest rates have been, individuals being able to earn it in the market or through a savings account, obviously interest rates have been a lot lower than they were several years ago. So the legislature did this in phases. So basically they said interest on delinquent accounts starting this year, January 1 of 2022, is still 1% per month, which is 12% per annum on all property types. Beginning on January 1 of next year and moving forward, the 12% will stay in place for all non-residential real property and for residential real property with greater than 4 units per taxable parcel. So if you have a 8-plex, you're late on your taxes, you're still going to pay 1% per month. But if you own a home and it's a single family residence, you're only going to pay less than that. You're going to pay 9% if you're late, so 0.75% per month. So they made it to where if you own a single family home, you're not going to be penalized as much as if you own a multifamily or if you own a commercial building, or even business personal property for that matter. The other part of this bill that was interesting is that they determined that starting this year, January 1, that there would be no penalties assessed on delinquent taxes at all. So that June 1, 3%, and that December 1, 8% have been eliminated this year. So if you're late, you're just going to pay the 1% per month on the base amount due. But beginning January 1 of next year and moving forward, that penalty will be reinstated for non-residential and for residential properties with more than 4 units. So again, that 8-plex, if in 2023 they go delinquent, they're going to have to pay the 3% penalty in June and the 8% penalty in December. If you are a single family homeowner starting next year, you will not have any penalties at all, and you will have a lower interest rate for delinquent taxes. This was, as you know, with most legislation, there's a compromise, and I think the reason for the staggering of this bill going into effect is because there are large counties like King County that have antiquated property tax systems, and in order to implement a change like this, it takes time to get all those databases updated and all of these system requirements in place. So I think that's why we saw this kind of ping-ponging of timing on the penalty and interest side.
So the tax rate is that per parcel unit, or is it per investor, because you said an 8-unit. So if you own an 8-unit, and let's say you own 2 of them in Clark County, one in Battleground and one in Washougal, just to have a separation. And the Washougal one, you have some problem tenants that don't pay, so you get behind on your taxes. Is it just for that one property, or is it for both properties?
Yes, so it's per parcel or per account. So if you're receiving 2 tax statements, then you would be treated as 2 separate properties, 2 separate delineated interest and penalty. So yeah, it would be just the one up north that would be receiving the penalty and interest.
Okay. Well, and this takes effect next year, correct? January 1st, when now all this stuff comes into effect, correct?
Well, actually, we're in it right now. So it went into effect on January 1st of 2022. So this year there is no penalty at all for any kind of property tax in Clark County or across the state, for that matter, through the end of this year. Then the penalty goes back into effect and the interest rate drops next year.
Yeah, I'm sorry. That's what I meant. The interest rate drop. That portion takes effect next year.
Correct.
The 1% per month, and the 0.75, for 5 or more units, and four or fewer, 0.75. That takes effect next year. That's what I meant. I didn't clarify, and I apologize. So it would seem
got
like
it. It's a pretty convoluted
yeah.
implementation, but yeah, you got it.
Yes, it's clear as chicken stock.
It really is. It was a mess.
I don't want to say mud, so I said with something that is good, chicken stock.
Yeah.
So it would seem as though this bill was created to benefit the small, individual homeowner, not necessarily someone with a large investment portfolio. Is that accurate?
That is accurate, yes. And part of the concern originally when this was proposed is that the property taxes that we pay help pay for new schools or fixing our roads or putting in new roads. It pays for public safety, firefighters, for example, city services, parks. And some of those require future investments, and those government entities go out for bond financing. And those bonds have a payment schedule. So the consistent and reliable collection of property taxes is what makes it possible to take out debt to build those schools or those roads. So we have to have money in the bank to make those bond payments. And those bond payments, the largest amount due happens on December 1st. So we need the money in the bank by December in order to be good on our debt. And that's why those penalties were originally put into place, was to make sure people like multifamily property owners or commercial owners who have larger tax bills, that they make their payments, that there's incentive to pay on time. So we'll see what happens in the future if it decentivizes on-time payments and if it starts to make our property tax system weaker, which could also impact the bond ratings of every single county, and it could impact the bond rating of the state. So we're just hopeful that people still honor our due dates regardless of the penalty and interest amounts, and that we're able to consistently maintain Washington State's good credit standing.
Yeah, and that led me to wonder what the impact would be on the county's ability to pay its bill, because you're going to essentially, reduce the amount collected in my mind, because you're going from 12% to 9%. And so is there a projected loss of income?
So we haven't had a scenario like this in the past. So there isn't any historical data to point to prove that. That was an argument that some treasurers made, that they felt as though our delinquency rates would skyrocket. We'll be watching that closely in the next few years. And if that happens, the only thing that we could do is go to the legislature with the data and show them that the system that they've put in place isn't working. In general, me personally, I feel as though a 9% for delinquent taxes is sufficient. I mean, that's a large amount of interest, I believe, to charge. So I was in favor of lowering the interest rate But with that said, it is my responsibility, fiduciary responsibility, to make sure people are paying their taxes and that we have, sufficient income to make sure all these budgets are being fulfilled. So all the work that they've said they were going to do can get done.
All right. Well,
So,
the
so
only
Michael,
other, I'm sorry.
I just want to hop in on what Alishia just mentioned, and that is she talked about her fiduciary responsibility. And I think it's really important to understand that our offices are here to protect the citizens of Clark County. In my role as the assessor, there's basically two ways that I do protect the citizens of Clark County. The first one is I do have oversight over the highest lawful levy, which means that tax districts cannot ask to collect more from the taxpayers than they're legally entitled to collect. So if, for example, I said they could collect $100 that one time, if they send in saying we want to collect 101, I protect the taxpayers by saying, no, legally you can only collect $100. The other way that we protect the taxpayers in the assessor's office is we manage the appeals. And one of the things a lot of times people don't realize is when a homeowner appeals their value, we're interested in making sure that it's 100% of market value, because if a homeowner comes in and their assessed value is lowered unfairly, right, the rest of the taxpayers have to pick up that tax bill, because we're still going to collect the amount that was sent in. It's just going to be paid by the other taxpayers. So when someone's appealing, our office, what we're doing is we're representing the other 170,000 taxpayers that aren't involved in that appeal, to make sure that we are making sure that the property tax system is equitable. So there's two different ways that, at least in the assessor's office, we are really working to protect all the individual taxpayers of the county.
Well, I think you both are doing a fantastic job and a commendable job, and I can't thank either one of you enough for taking the time to answer my questions. This has been an eye-opening and educational experience, and I just thank you both so much. And in closing, could you each give some contact information for your office, not necessarily you personally, but for your office, maybe a telephone number and a website, and I'll add it to the screen later. But just a telephone number or website that they can go to.
So I will just start, and that is if you go to the Clark County website and then go to the offices to Assessor, you will get all our information in terms of how to contact us, email, telephone numbers, and a number of services that are online, that in the comfort of your home at midnight, you can go on and access our services. And so a lot of that can be done through the website. So I would always push to be people to go to the website, which is clark.wa.gov/assessor to get to our office. And I'll let Alishia talk about hers.
Yeah, so to contact the treasurer's office, we obviously have 5 individuals manning our phones, and so we welcome phone calls, 564-397-2252. We also, like Peter, have a wealth of information on our website, and I encourage folks to check it out. You can learn everything from your tax statements all the way through to our investment and debt management and banking services. And that's at www.clark.wa.gov/treasurer. And I guess as a parting comment, I would like to leave with viewers, and for your information, if there are homeowners that are facing foreclosure and that need assistance, we work with the Washington Homeowner Resource Center, and there are programs right now to help with foreclosure assistance and also property tax assistance. Some of that funding is from the U.S. Treasury Department and is being used to help with people who have had hardship due to COVID. And it may even help prevent foreclosure and to pay off overdue payments. Their phone number, if you could put it on the screen, is 877-894-4663. So that is a really great resource for struggling homeowners. And there's also information about down payment assistance programs and other home related resources. So people are welcome to call us, visit us online. And Michael, I really appreciate the opportunity to share and for you to take interest in the work that we're doing. It is important, and the appreciation back to you.
Well, I just, again, I can't thank either one of you enough. This was just a beautiful, beautiful experience. And I thank you for the job that each of your office does. And please go give each one of your coworkers or employees a hug for me, or a virtual hug.
Absolutely.
So thank you so much. And gosh, this was just a great experience. And again, I'm very, very grateful. So thank you so much to both of you.
Thank you.
All right, thank you, Michael.